service to their customers, and the last thing they often look at is their cash in their business. Often quite aware of maybe how much cash is in the bank. And I'm going to encourage everybody to take notes as you go along. I'm quite happy if you email me after the session. I'll give my email address at the end to let you have a copy of this slide there too. But it's just a combination of just some practical advice here. I've got a very small practical session if you've never ever drawn up a cash flow forecast before and you'd like to know how to do that. I'm going to walk through that, and then just a few other things to try and get as much cash as you possibly can in your business, because turnover is vanity, profit is sanity, and cash is reality. So it's vital that we have as much cash as we possibly can in our business. At the top of the screen there, it's, successful people do what unsuccessful people do. They don't wish it were easy. They get better at what they do. That's a quote by Jim Rohn. And one of the skills we have to learn in business is actually this matter of managing our cash within our business, and more so than ever. I work as a business coach in Cheshire and in North Wales. I've got over 20 years of experience of building businesses. One business we helped to build from a local business to a £60 million, 230 branch franchise business throughout the UK. And I bring that skill along with the deep and wide skill set that we have, or toolkit that we have at Actually Coach, to help business owners just to get a grip on the basics and then to grow their business, grow their team, grow their profits, make their businesses easier to run. Now, my agenda for this afternoon is quite straightforward. It's about managing cash flow. We're going to have a very brief chat about the cash sources that are available at this moment. We're going to look at cash flow forecasting. I'm going to discuss something called the cash gap, which may or may not affect your business. And then we're going to look at KPIs and some additional help that will help you to keep a grip on the numbers in your business. So just on this point of building up your cash reserves, first of all, just want to encourage everybody to take advantage of the cash resources that are being made available right now by the government. Don't ignore them. Don't put them to the bottom of the list. Don't be so focused on looking after your customers that you don't look after yourself. So first of all, there's an amnesty on VAT. So remember to cancel your VAT direct debit. Really important. Okay, the money might come out by accident, so make sure you cancel that. Call HMRC to defer any PAYE and then IC. They'll help with that. Personal taxation. No tax to pay in July. Again, cancel your direct debit in case. Now, try and get as much cash in your business as you can. If you have an overdraft, try and extend it. If you don't have an overdraft, try and get an overdraft in place. If you don't know your fixed costs, after this, you're going to need to work out what your fixed costs are in your business. Those are the things that come out whether you're making money or not, as your rent, as your electric, as your utilities, telephone bills, any subscriptions that you have. What we always say is, listen, and this is a lesson for today and going forward into the future, always try to have between 3 and 6 months of fixed cost available in your business in reserves. Now, it might sound like cloud cuckoo land today if you've not done that, but it's a really important principle to have in your business. As you come through this at the moment, well, last couple of weeks, people were in denial as to whether this is going to affect us. Now we're in the process of trying to survive through it, and then we're going to thrive through it at the end of it. And when we start thriving again, we need to build up a reserve because things like this happen. Extend your credit card limits, and if you have staff and you're furloughing them, I'm sure you'll follow the direction that's been given to you. The government are going to provide the support of 80% of staff's wages backdated to March the 1st. There's also support for business owners and directors within the business too. Avail yourself of all of these. Contact your bank about the business interruption loan. The government will secure up to 80%, 12 months interest. Now, there's all sorts of stories you hear going on around those about personal guarantees and the way in which it's being organised and lots of holes in it. It doesn't matter at the moment. Just get your applications in, and anything that's available for you in terms of the business rate relief, make sure you avail yourself of that once that information starts to come through. So build up your cash reserves as much as you possibly can. We believe that this is probably going to be 90 days that we're in this process. We went in a steep dive into this situation. We're going to come out of it fairly quickly too. Everybody will want to get their hair cut and their nails done and buy some paint and whatever it is that we can't do right now. We need to do it when we get out of it. So there'll be a rush as we get out of it. How soon and how long the government will restrict trade, we don't know, but that's the indications we're getting at this moment in time. So we need to make sure we've got cash, definitely for the next 3 months. I'm going to ask for a hands up at this moment. Hands up if you're a cash flow expert, managing cash flow, drawing up cash flow forecasts, looking at your numbers. No? Great. That's why I put this title here. That's a series of books, isn't it? It's just saying, listen, most of us are not experts in all areas. We're experts in what we do. Usually cash flow and people looking at numbers becomes a bit of an issue, but it's quite interesting. Cash flow is one of the first things we did when we left school. Think about your first wage slip. Where did your eyes go on your first wage slip? What part of the wage slip? It's usually down to the bottom right, isn't it, when you look at the net pay that you've got. And then if that figure isn't correct, you then go to the top left. You start looking, well, how many hours have I did? And what happens to that bonus? And what happens to that overtime? And if that still isn't correct, you then go across to the right and you start looking at, did they take too much tax off me? What we're talking about here, managing our cash flow, it's just the same as managing our personal cash flow. It's just our business's cash flow. And we need to become pretty good at managing it. So what I'm going to ask you to do, just make a note of these things to help you to put together a really simple cash flow forecast. You can open your Excel sheet if you want to. It's really quite straightforward. What you're going to do is you're going to go to your bank, online bank, and you're going to download the last 6 months of bank statements. And you're going to download them in a CSV format. Download your last 6 months in a CSV format from your bank. This is the simplest way to get a cash flow forecast in place. And what we're doing here is we're going to try and find out how much money we should have in the bank in the next 3 months if we've taken advantage of all of those reserves and we've done some of the other stuff we're going to talk about later on. How much money will we have in the bank in 3 months' time? We can get a window on it by looking back at the last 6 months. When you open up your CSV file from the bank, this is what you'll see. You should see the date of the transaction, you see the amount, whether it's negative or positive, and a memo or a description as to who it was payable to. You're now going to use that information to create your cash flow forecast. The first thing you're going to do is you're going to add another column called category. And you're personally going to categorize each of those expenses as to what they are: insurance, wages, loan, receipts coming in from customers, whatever it is. Okay, you all follow me so far? Hands up if you follow me so far, please. Can you press the hands up button or raise your hands? That's great. Yeah, I can see your hands going up as well, whichever one you want to do. Okay, so you add a category, another column called category, and you're going to go down and categorize all those expenditure items there. Thanks for raising your hands, everybody. And then now what you're going to do is you're going to add a week number, and this week number is the annual week number. So I think we're in week 13 right now. The spreadsheet will do it for you. There's a formula you put in there. I'm just going to zoom in there. Can you see that as I zoom in the top left? There's a formula with week number. So all you do there is put that formula in week number, and then you reference the cell that you want to get the week number from. So you reference this first cell here where the date is. And what that will do is it will insert for you the week numbers throughout the course of the year. So all these transactions on the left here happened in week 1. Okay, it's going to be recording this session, so if it's going a bit quick, don't worry, you can listen to it again. And so what you do is you've added a category column, you've added a week number column, and you've used a formula to get those week numbers in there. And then what you're going to do is create what we call a pivot table. Don't panic, it's automatic. At the top of our Excel spreadsheet, there's after it says File and Home, there's Insert, and you'll insert Pivot Table. And what the pivot table is, it just summarizes information from this spreadsheet that's in front of you, which is just a collection of information at this moment in time. And I'll show you how it summarizes it for you. You're going to click Insert Pivot Table. Don't change anything in this box here. Nothing needs to change. It will have selected the whole of the table for you there. And it will be putting it into a new sheet, a new worksheet in your spreadsheet. You just click OK. And it will give you some options now as to what you need to do. You will see 4 boxes at the bottom, and then you'll see your fields at the top that are in your spreadsheet. And you're just going to drag them across. You're going to drag the amount column, the amount item there, down into the value section. You're then going to drag the week numbers down to columns, and then you're going to drag the category down to rows. Okay. Again, excuse these awful arrows on here, but it's just as simple as that. You're just dragging them into those various boxes. Now, as you drag them in, what will happen then, and you click OK, it will produce you this pivot table here. So you can see what it's done for you here is it's taken the week numbers and it's put them out across the top under the dates. On the left-hand side, it's taken all of those categories that you put in and taken all the expenditure across all of those categories and put them down on the left-hand side there. So what you can see is week by week, how much money is coming out and how much money is coming in against each of those categories. Any questions on that? No questions coming in. So we all understand that. Can I get a hands up if you all understand that, yeah? What we've done there? Okay, oh, we've got a question coming in. Is that just the hands coming up? Brian, you can help me there. If there's any questions, Brian, just let me know. What we've done is we've categorized the expenditure, and the reason we've done this is we're just going to look back historically then and be able to chart forward. So, for example, if you look down at row 10, customer receipts, we're getting an average amount of customer receipts that are coming into our business. We'll know that because of our business, and what we'll be able to do is extrapolate forward for the next 12 weeks how much we think on average will be coming in. It's not accurate, it's a forecast on average. There are some payments which are fairly similar. If you look at the top there, there's £54.55 of advertising coming in every 5 weeks, going out every 5 weeks. So what we're able to do is to produce a cash flow forecast going forward over the next 12 weeks based on this historic information. Okay. So what we're doing is at the bottom of the screen is getting the really important figure. We stick in the first row there, the balance at the beginning of the week, and then the balance at the end of the week. The balance at the end of the week is purely, see the grand total figure, the grand total line, the £35,387.42 minus figure. We're just adding that to the grand total that we had at the beginning of the week, and that gives us our balance at the end of the week. So it becomes a balance of 1663, which goes across to the next week. Here, you see that? If my mouse is moving on the screen there, and then it just keeps doing the same calculation. If you need help with that, I'll show you that. If you've got somebody in your accounts department or somebody's clever that can do that, but I can show you how to do that. It's quite a straightforward calculation. And what you're getting is this figure at the end of the week is the most important one. This is the bank balance that we will have at the end of each of these weeks, the one on the very bottom row there, based on it. This is actual at this moment in time. And then what you're going to do is you're going to add on extra columns, and you are manually going to enter these figures in these extra columns here based on what you can see historically. And going forward, you're producing yourself a nice cash flow forecast at the bottom as to where you should be in in terms of your cash position. So that's how to produce a really simple and quick cash flow forecast. Any questions on that? No questions coming in. If they come in a little bit later and I missed them, Brian will pick up on that. It's vitally important we understand how much cash is going to be flowing out of our business and how much cash should be flowing into our business. And it's called cash flow for a reason, because cash should flow through your business. If you think about a stagnant pool of water where there's no cash flowing, it isn't a nice place to be. And the same is true in our business. And over the course of the next 3 months, we need to make sure that we understand what the cash flow is and we're in control of it. And this will help us to do it. It's a really simple tool, which hopefully you'll take and you'll adopt in your business and you'll improve it and you'll continue to use throughout your business. Some businesses have what we call a cash gap. And what we mean by the cash gap is this. Just take that chart in for a moment. A lot of businesses have to buy stock or inventory. It becomes payable within 30 days, which is the pink line there. They keep hold of that stock, they provide it to their customers, and their customers pay them 30 or 60 days later. So it creates what we call this cash gap at the bottom. Can you see that there? So I've had the stock in, I've paid for it on day 30. I don't start receiving money from customers until day 60, 90, or 120, 110 going forwards. So we have this gap in the middle here, this cash gap. Okay, which could be just this little white block in the middle here, or it could be this whole red line here. And this is where businesses often get into trouble. And this is where your cash flow forecast is important for you to understand when it is you will receive your money. Now, if you're in a service industry, you still have a cash gap because this inventory is people. I'm paying my team to deliver something for my clients, and I'm not getting paid until this particular point here. So what we try and do is just help you to shorten this cash gap by a few simple things. I'm just going to walk through them very, very briefly here for you. We look at our creditors' terms, okay? So whoever's providing us with stock, what credit terms are they providing for us? If we're a service provider, are we looking at the terms that we're providing for the people that we're providing to? So, you know, are we looking at I suppose the credit that we're extending to those people that are buying from us? Are we looking at the credit that we are getting from the people that we're buying from? Can we negotiate longer payment periods for those that we owe money to? Could we negotiate some sort of bonus in terms of how quickly we pay those people or how much we spend with them? If you are manually involved in business, sometimes creditors will help you out to sell their stock on their shelves by paying for shop fittings or similar investments, or maybe license fees if you're selling licenses for them. So we need to look at how we put our terms in place with our creditors. If we're holding stock, could we improve our stock holding? Could we keep a record of how long it is that we keep stock by department and by line? Have we got a forecast of future stock holding? Now, that's a really important thing to do right at this moment in time. We look at our supply chain, up and down our supply chain, as to whether those people are able to provide for us or move stock. We need to have a regular review of slow-moving lines. So again, if you're a retailer, have a really careful look at the stock that you're holding in your warehouse and in your shop. Look how quickly that stock moves over. Start to record. Does it move every 30, 60 days, 14 days, or 100 days? Move those slow-moving stock lines out of your business if you possibly can, or stock less of them. Maybe consider stocking less items within your business. Stock is holding up cash within your business. Go back to the cash gap. You've got that stock in, you've paid for it, and it's not moving. Consider stocking less. Have a look at what is fastest moving and stock that. Have a look at what is fastest moving and most profitable and stock that rather than the other stuff. Get your supplier to send it direct to your customers, or give customer incentives on those slow moving lines that you've got within there to get it out off your shelf and out to your customers. Faster debt collection strategies will help you also at this time. Has anybody tried this method here? Does it work? What we need to do really is just look at the relationships that we have with our customers and work out how we can improve that relationship and help them to understand how we want debt to be collected. In fact, actually, don't give credit to people that you don't know. Don't give credit to people that you haven't checked. Do you carry out a credit check on your new customers? Do you give credit to anybody? If you've been asked to do a £20,000 project, how often would you just give somebody £20,000, £5,000, £2,000 just on trust? Don't do it. So review your strategies in terms of the credit that you offer to your customers. Okay, give incentives for prompt payment for those that do have credit with you at this moment in time, and review what's happening with your key customers. Okay, the ones that you have extended credit to, review what's happening with them. Record what we call their debtor days, and review how quickly how much time they take to pay you. If they're not paying you on time, you're not a bank. Okay. However, I'm going to contradict that and say, if they're not paying you on time, charge them interest. Okay. If they want you to be the bank, charge interest. If that's what your terms say, charge the interest on that amount. But to get out of the problem in the first place and for it not to be an issue, actually, it's really important that you have a defined process. Most times when I find businesses that I'm working with that have got problems with credit from their customers is because they don't have a defined process to collect that cash from the customers. Okay, so let's have our terms set out really clearly. They are, people say 30 days, but I'm going to say, why give 30 days? I'll go back to that question. Why give 30 days? Why do you give 30 days? Can you just tap in the chat box why you give 30 days credit. I'd be interested in your answers.
Jeff, we've got a question too from John Staunton. Would charging interest on outstanding debt not adversely affect customer relationships?
Yeah, so you need to, the great question, John. The first point there is to maintain great customer relationships. So oftentimes we go into that situation and we're going to negotiate, and negotiate can seem quite a hard word. So what we're going to do is we're going to have a conversation about it. So yeah, let's have a conversation about how you can pay down this debt. Okay, what you need to remember, John, as well at this point in time is that other people are struggling and they're holding on to their money. I don't think that's necessarily fair. Let's have a conversation about it and make sure, yeah, we come to an agreement. If it gets to the point though where there is no conversation, John, yeah, definitely charge interest. Thanks for your comments in the box there. I'm just trying to see if I can get those up there in the chat.
Martin's also said, I think so. I think I would lose customers if I charged interest, but that could be me. God knows why.
So okay, so we have certain beliefs around that, and part of the belief is that we have to give 30 days because that's what's done in business, but you don't have to. And particularly as we come out of this situation, I can just say, everybody, there is going to be an economic shift. So you have an opportunity to change the way in which you do business, and for people to understand that you're not a bank. And that swings both ways in terms of us paying our suppliers too. But the simple thing to do to work our way through this is to have a conversation at the beginning of your relationship with your customers, or as you're reviewing their account, or as you review their debtor days, and put a process in place that says on the right hand side there, listen, we're going to have an informal call, then it'll become a formal call, then we'll send a letter. If we get past that point and we're charging interest, we'll outsource it to somebody else. Okay. If you are uncomfortable doing that, get somebody who is comfortable doing that within your business. If there's nobody in your business comfortable carrying out that process, outsource it to somebody else. Okay, it doesn't become an issue then in terms of it being a personal issue for you. I go back to our first wage slip. If we spent a whole month working on our first wage slip and it said 0 at the bottom, how pleased would you be? Or if you work this month and they said, all right, we'll pay you in July for the work you did this month. It's at the end of the day, this is your money, isn't it?
And Jeff, Roz says, I work on 7 days and use Go Cardless.
Fantastic, Roz. That's the way to go. So what happens is we train our customers, and if we train them that they have 60 days to pay, they'll pay us in 60 days. If we train them at 7 or 14 days or payment advance, they'll pay us 7 or 14 days because they value what we do, and that's why they have us as customers, as they use our services. Okay, this is just about, is a fair exchange, isn't it? It's what we're talking about here. Combining all the strategies, we're just looking for better payment terms. If our suppliers want us to pay early in advance, maybe there's a lower unit price, and maybe that's an incentive that you can provide to your customers. I want to get paid 7 days or 14 days. Listen, I'll give you a lower price, or the charge is higher, actually, the other way around, if you want extended credit. And of course, just improve our stock holding. Don't be holding stock and paying for stuff that we don't need right now. So what we're trying to do is shorten this cash gap, and we just need to get really focused on this. Okay, cash is king. Okay, cash in our business is an enabler or a disabler. The more cash we have, the quicker we can grow. The less cash we have, the slower we grow. No cash, our business dies. So we need to be really focused on the cash within our business, have a grip on those numbers and understand them. Just one last section here, and this is about KPIs in your business, because the cash in your business comes from the activities that you undertake in your business. Please, can I get a hands up if anybody has a dashboard of the key performance indicators in their business? And a dashboard that's reviewed on a regular basis. That's great, Andy, thank you for that. Got a hand raised there. We need to have a dashboard as to what's happening in our business and what is driving the cash that's coming into our business, which is the reality of the business that we're in. So this is just a simple example of a dashboard, Online Marketing Limited. We've got sales at the top. Sales doesn't mean cash unless we've got great credit terms in place with our customers. We've got our gross profit, we've got our net profit. And what's driving all of that are the number of cold calls that we're making, through the reps that we have in our business, how many reps there, calls those reps are making, what the conversion rate is, what the average amount that was coming in. And if we're controlling all these, if we've got these numbers on a dashboard, and this is a dashboard, it's just a spreadsheet, okay? And I have control of these numbers, all of a sudden I'm controlling what's coming in at the top and what my net profit is at the bottom. You're probably wondering what this has got to do with the cash. Well, it is cash, isn't it? You know, this is about the profitability of our business right now and going forward into the future. We control and we twiddle all these knobs here on this spreadsheet to help ourselves to have control as to what's happening within our business. So if you don't have a KPI dashboard in place, quite happy to have a conversation with you and help you to put one in place and give you a simple template spreadsheet. I said there'd be some resources, give you a simple template spreadsheet to be able to do that. So thank you very much for your attention this afternoon. I hope that's been a successful first lunch and learn for you. Numbers is what it's all about. I'll take you right back to being 16 years old and getting your first wage slip. You looked in the bottom right-hand corner to how much you were getting paid. If that wasn't right, you looked at the top and you said, well, hang on a second, how many hours and where's the bonus and where's the overtime? And then you looked across at tax. We've been interested in numbers right from the beginning of our working life, and we need to be in our business. And that starts with managing our cash flow. Our cash flow comes from our activities. And for our activities, we deserve to be paid for our activities. So let's make sure we know where our cash is going, whether our cash is coming to us and when it's going to come to us, and have conversations around that with our suppliers and with our customers. And right now, it's really important to have those conversations. If anybody would like to carry on this conversation with me, my phone number's on the screen there. Take a note if you want to. You get hold of me by email. I'm running additional free webinars actually over the next few weeks around business planning, leadership, remote team management. And I'm also providing complimentary confidential business reviews for anybody who'd like to have that with me. 15, 20 minutes, just let's talk about what's on your mind and what you need right now in your business. Happy to do that and for you to join our community of successful businesses.